Well, hello everybody and welcome to another Pepperstone Learn It Live webinar. Today we're talking about scalping FX majors, an incredibly important, incredibly exciting topic, close to our hearts, probably one of the ones that I guess we've been doing for a long time now, and it's just because scalping FX majors is one of the best things to do, isn't it, Tyrone? As always, my name is Thomas Atkinson from FX Evolution, and I'm joined by Tyrone to have a bit of a banter, a bit of a chat about this, and to also educate you and then show you some live market analysis. Ty, how have you been?
It is. Welcome, everyone. I've been good. Yeah, we're certainly starting to see some action in the markets at the moment. We've seen a bit of weakness in the US, which is starting to get these currency pairs moving. So it's a very timely webinar tonight. Looking forward to it.
Absolutely, Ty. So just before we get started, of course, the information contained in this video or webinar is generic in nature and for educational purposes only. The information will not take into account your personal objectives, financial situation, or needs. This information is not to be construed as an offer, recommendation, or solicitation to buy, sell, or participate in any particular trading strategy or investment advice. It's really just there to help educate you in some of the things that we do. So as we always do, Ty, quick shout out just for some of the things that Pepperstone and we offer. And Pepperstone, of course, has the great Telegram group. That thing is getting massive nowadays, Ty. I've been, of course, following it since the very beginning. I might have been user 3 or user 10 or something like that on the Telegram group. It's a great way to get information about the Forex markets, stock markets, indices, everything else. And it's really curated for you. So it's no fuss, it's no nonsense. It's basically just straight to the points that you want. Make sure you get in there. We'll chuck the room link. We've also got our own FX Evolution public Discord. If you want to come and have a chat with us and chat with our community as well, we more than welcome you. And of course, that is free to get into the public side. We'll chuck the link in and through there. So Ty, what are we going to be covering today? What's got us all excited about these FX markets? Well, firstly, they're back, which means they're trading again, and they're trading pretty well. Increased volatility coming out of the US equals movement through the majors, through the major FX pairs. They have been a little bit sluggish up until about 2-3 weeks ago, I think. So we're going to be taking a look at how to scalp these majors, what to look for, and the types of things that make us think, okay, these markets are back, and how we really start to take advantage of those. Then we're, of course, doing our live chart analysis of MT5, using MT5, and then key scalping entry points and timeframes that we usually look at. Our top-down approach, something we talk about a lot. Why do we use it that way? How to interpret it? And even if you're a scalper on a 1-minute chart, the importance of looking through the timeframes to get involved in what we call the participation phase. We want to be part, I'll write it here, part of the participation phase, don't we, Ty? We don't want to be miss that one and going against the trend.
No, definitely not. You definitely want to be avoiding that for sure.
And then, of course, Ty, we have our live Q&A with us, the FX Evolution team. If you have any questions, please feel free to ask it throughout this webinar, as we're more than willing to answer it throughout, and especially if it pertains to what we're talking about that time. But Ty, I've got to say straight away, things or big things are happening at Pepperstone, and this is just such a great thing that Pepperstone is doing. And I think it's bringing to the forefront some very important stuff about why Pepperstone are the preferred Forex broker. Why? Because of this type of thing. And it's really thinking about trading over the long term. Now, if you were to go and pick any broker, usually, Ty, the way that a lot of people would do it is they'd say, oh, I want the cheapest rate. I want the cheapest spread, and they'd say, and then you could easily make the cheapest spread for the month by just having one time a very great spread. It's actually more about having great access to liquidity, and of course having great access to consistent spreads. And you can see that Pepperstone won out recently on odd US dollar, euro US dollar, pound US dollar CAD, Thai, your favorite, US dollar Swiss, and US dollar yen. And the difference or the benefits are huge. I mean, Ty, what did we learn very quickly? That it wasn't about so much just the spread or the brokerage, but it was more about the consistency, wasn't it?
Yeah, that's right. Look, at the end of the day, you're not going to be sitting there waiting for the spread to be at the right price before you place a trade. You've got to place a trade knowing that the spread's going to be, right most of the time. That's the most important thing. If you're sitting there waiting for the spread to reach a certain level before you enter, then you could be missing a good opportunity. So you need to be trading, at a comfortable level where you know that the spread that you're getting is consistently good, not just occasionally going to inverted or zero or really, really low, because that's just a very deceptive way of really brokers tricking you into thinking you've got the best spread, when in fact it only happens, one time every 500 ticks.
Yeah, you don't want to have that miraculous inverted spread once and then the rest of the time have a very heavy one. So this is just a bit of an example between two brokers, obviously Pepperstone and MetaTrader Broker A, shows you the consistency over 100 trades. Now, this is only available, Ty, for standard non-commission accounts. So make sure you talk to your Pepperstone sales representative before going ahead with anything there. Just make sure you're on the right account for that type of promotion they've got. So, Ty, we always talk about this. When it comes to scalping, the most important thing we know is what news is coming out. Why do we need to know that? Because say on this calendar here, and most Forex calendars look very similar, a little bit of red news equals movement, high impact news. High impact news sometimes will move the markets 1 pip. Literally, there'll be very little movement. Sometimes the markets, however, during something like Fed Chair Powell speaking or non-farm payrolls, like we saw that surprise number last week, the markets went very quickly, Ty. The algorithms got involved. And of course, if you were scalping in the wrong direction, that opens up for some nasty kind of bad things to happen to your account. And of course, the all-important, terrible revenge trade. So we want to be aware of our news whenever we can, don't we, Ty?
Yeah, 100%. Without knowing when it's coming or when it's due, like you're really trading blindly. And, the problem with news is, of course, it can spike very, very quickly for a couple of seconds, take out a stop loss and potentially a scalping trade. And then all of a sudden the trade goes in your direction anyway. And you could have avoided it if you knew the news was coming out. So it's really, really important. Look, the amount of times, even when Thomas and I started trading, we weren't aware of this, and we'd place a trade and all of a sudden it gets spiked out. And we think, oh my God, the brokers are trading against us, when in fact we've traded straight into an interest rate decision or something silly like that. Because the problem is, a lot of people, especially in Australia, find themselves trading in the London session, right? So quite often it's sort of 7 p.m., 8 p.m. when you're home from work. Maybe you're a part-time trader, but unfortunately that's when a lot of these news events actually come out. So it's very, very highly likely you get caught up in them if you're not aware of when they are being released. So very, very important.
Richard brings up a great point here. Richard says, I think US dollar, USD CPI might be interesting. Exactly. That's going to be a news event that you should be aware of that's coming out very soon. And that's the one that's going to be moving the charts on the scalping timeframes. Remember, when you're scalping, when you traditionally talk about scalping, where are you guys going to be? You're going to be on the 1 minute, the 5 minute, the 15 minute, and some people will argue up to the 1 hour. Okay, that's just the reality of generally where you're taking entries. Now, that doesn't mean that you should only be looking at those timeframes though. And I also think it's really important that people understand what scalping means, Ty. Scalping means dedication. Dedication means time. And when you have a scalping attitude, you have to say, okay, I'm going to pick a time frame of the day. It could be pre-market, usually a great time. Could be end of New York close, actually a great time to scalp. Ty, how many times did you used to get up at, 4 a.m. in the morning or 3 a.m. in the morning and scalp those last 3 hours? You loved that time, didn't you?
I did. I did do that for a while until I started getting in trouble from the wife.
Red eyes.
Yeah, that's right. So look, 100% correct. But look, ideally in a perfect world, you've got to try and find the time frame that's going to suit you, that you're going to be the most comfortable. It's going to have the least amount of impact on your life, of course. Otherwise, what's the point of trading to get a better lifestyle?
Yeah, otherwise you're kind of like burning the candle at two ends, Ty, and then what happens, you end up not having a good lifestyle and making mistakes. Because one thing about trading is it's about psychology as well, and how good is your psychology. If you're unfit and tired all the time and not thinking correctly, then it actually will impact your trading. It's like most elite athletes in anything, they tend to have this certain routine about them. So I think the times to trade for part-time and scalpers and day traders is going to be around market session opens or market session closes. Generally, there's a lot of noise that kind of gets started with momentum through those points, and you get that liquidity injection that comes in with the market open. So 30 minutes to 1 hour before a market session, you may want to go in and draw what we call our support and our resistance lines, and we'll be showing you this today. And then, so we want to know where those are for the session, and then we want to trade either the breakout either way, or we want to trade within the range, etc., throughout those sessions. That's what a scalper predominantly wants to do. They want to take in part of that. Now, you also want to target pairs for that session open. So if we're talking about majors, and we're talking about the Asian period in the morning, what are we going to be targeting? Odd, New Zealand, of course, those kind of ones, yen.
Exactly.
These are the types of currencies that we want to target in the morning because they're going to be most active during their market opens. We trade the London session and the European session. What are we going to trade? Euro, pound, etc., etc. It's all important that you understand the time frame that you're going to be able to be accessing the charts. Then we also need to know that if we're scalping, we need to put in probably 1 to 2 hours a day. Ty, would you think that's a fair amount of time?
Yeah, I think it's a good amount of time because it gives you an opportunity to scan the market, scan a lot of charts. So you can do a lot of analysis in a couple of hours, but you're not going to be welded to the screen to the point where you could be potentially lured into over trading or taking trades that potentially aren't there because you're investing so much time. When you are scalping, it's not always a relaxed atmosphere. I think you're very vigilant. Yeah. Waiting for action, watching candles. So you probably don't want to be doing it for too long a period because you start to get tired then, and that's when mistakes start to creep in.
Exactly. That's when the mistakes start to creep in, and we just want to make sure we limit our mistakes. If you only took 3 trades a day and 2 of those 3 were good, and of course your ratios were correct, that's actually a great win. Sometimes people get caught up in this idea they've got to take 10 to 20 trades in a day and they've got to make it happen straight away. 10 to 20 trades at basically flipping coins is not that much, is not worth it when you can take 2 or 3 good trades and be more consistent and then have proper risk management around that. So Tyron, we always talk about this, and I don't think whether it matters whether you're a swing trader, a day trader, a scalper, or an investor, the top-down approach really applies to you. And why is that? Because we're starting with a high time frame and we're understanding the dynamics about the market. There is nothing worse the scalper can do than sit on the 1 minute, 5 minute charts and not be aware of the news, which we already mentioned, and not be aware of the top down in terms of the support, resistance, and the psychology of the market. So what we're going to do right now is we're going to start recognizing some price trends on the bigger time frames, and we're actually going to get stuck into the charts just quickly and talk about what's happened recently. So I want to take us back to last week, and I want to talk about this particular chart. Okay, so this is the pound yen. Now we spoke about this one, Ty, last week. We talked about this resistance breakout, and I think this is just a great case of the many phases of a market. Number one, coming into this market, what we saw was we had a very clear level of 4-hour resistance here. We also had Tyrone's favorite, a series of higher lows. Ty, what's it all about with the higher lows on this time frame? Why is that so important?
Well, when we see the higher lows forming like that, especially at a base of a moving average, a key moving average at that being the 50, is that we're starting to see that the sellers are actually gaining momentum a lot quicker. So that they're basically, you can see as they're coming down, the buyers are stopping that rort a bit quicker and quicker and quicker as they find support, and eventually the buyers are going to push through. So the sellers are losing the battle a little bit earlier every time we get the higher low, and eventually the buyers are going to potentially push it through that resistance, as you can see there, and then off she goes. So every time it makes a higher low there, you can see it going up along the 50. The sellers have lost that little bit more momentum, and the buyers are kicking in a fair bit harder, sooner, and eventually, and most of the time, inevitably, the resistance above breaks through. It's a really good sign, actually, especially when it's getting support from a rising 50 or 20 moving average.
Exactly. So here's the 50 moving average as Tyron's talking about. Then we have what I like to call the fake out candle. And Ty, this has got us a few times, this sneaky candle. The way that this one trades, it's basically a shooting star or a pin bar, as many people will know it as. Now, there's 2 things that you want to interpret here. Number one, is it at resistance? Yes, it is at resistance. But what will happen in markets? Well, firstly, this one actually gaps above. It gets so excited to jump off, a very positive sign. But generally speaking, the shooting star needs to be confirmed by a further move on down, doesn't it, Ty? It's not just about making the candle. Let's see some actual momentum in that direction. We've got a series of higher lows telling us one thing.
Definitely.
Bullishness.
Only a trigger happy Harry would take a shooting star like that on the first candle. You would not fade that candle until the next one gives you the sign. It's a candle in isolation. Yes, it's at resistance, but you must wait for the next candle before you be taking that. Otherwise, yeah, your trigger happy hands will probably pay the price sooner rather than later. You definitely want confirmation. It's not just for this particular candle, but for a lot of candles. But this one in particular, that's the one that will get you, because people will be fooled into thinking that, oh, well, it's hit that resistance again. This is the candle. Let's go.
Yeah, that's right, Ty. So we get that gap out. And again, I know we're talking about scalping. This will all come together into a realization in a few seconds. But we're on the 4-hour, and then we suddenly see it move up and above. And what we can do at that point, remember, we swing back all the way to the start of this webinar, or the start of this video if you're watching on YouTube, the part phase, the participation phase. What happens, Ty, when it breaks through this resistance? It's most likely going to go to the next level, isn't it? Now, did it go further? Yes, it's actually what we call the excess phase in a market, where the market overshoots the level. But notice how it started coiling above there now. What we want is we want to get some of this, I guess you could call delish. Some of the delish in here, Ty, is what we want in the participation phase. And we instantly, once we see this breakout, draw our resistance up here, and we want to scale this down into the smaller time frames. We want to go through into the 15 minutes. We want to go through into the smaller time frames, and we want to bring our indicators in that we can use for scalping techniques. And we want to start recognizing maybe an opportunity. So I'll show you where all of this happens. I believe it's somewhere around here. So let me just quickly bring this out for 1 second. Pull this across. You can see this is the resistance. This is the breakout that occurs. Now, if we actually start breaking this down together, there's a few things that occurred throughout this run. We've got Bollinger here, which is these lines either way. We've also got stochastic down here, very popular scalping indicator. We've got MACD, standard settings, and then we've got RSI. So these are probably the 3 most common, or 4 most common indicators that people use. Would you agree with that, Ty?
Yeah, definitely for scalping and sort of swing trading. They're the ones that are going to appear on every Google search and every YouTube search. A lot of things have been done on it, but yeah, we advocate very, very strongly that you really should understand what these indicators actually do and what they're trying to tell you before you actually use them. Don't go on the word of some YouTube guru. You definitely want to be understanding for your own sanity what these indicators do. But these are definitely the most popular, because they give you the here and now information that can give you the edge, especially at a serious point of support or resistance. So they're definitely the most popular, but we do urge you to definitely understand them before you trade them.
So one of the things that came to my eye straight away, Ty, was we had kind of like this red line, which is a 20 exponential, but we have the middle line, which is a 20 moving average, effectively in the middle of the Bollinger. And we saw it pick up through this 15 minutes, and then it closed above, went on its first initial run, came back to the 20, very similar area. And at the same time as it came back to the 20, we had this. We had our oversold stochastic in the direction of the trend. So this is bringing together a couple of things. We're also not quite anywhere near the top of our participation phase. So is this a good opportunity for us to then drive in on the smaller timeframes? I think it's definitely a good option to now start driving in and seeing whether we can find other reasons to be in a trade around that point. So we're basically right here. Now, if you go into a 1 minute chart, and let me see if I can bring this up. Yeah, if we go into a 1 minute chart, what you're going to notice is, and we'll just get rid of these indicators for 1 second. The one thing about having so many indicators on the chart, and why you won't usually have that many on the chart, is it's all about the price action more than anything else. Is on this 1 minute, what we really have is we have a base, we have another base, and we have that intervening peak over here, effectively like a little miniature double bottom coming back. Now, we saw the stochastic was also oversold at this point. We saw the 20 moving average was there at this point, and then we get that 1 minute breakout here, which signals that further bullish movement. So if we want to be in a scalping kind of position, we want to think we're not even near the top of our participation phase here in the pound yen. It's a pretty major currency, and it's already, not even 2/3 of the way, not even 1/3 of the way to the level that we expect it to go to on the larger time frames. This could be a nice little scalp opportunity break where you've watched the market come down, you've watched the market come down again, and then you take it through. Something like that is the type of thing that you're looking for. Ty, what are your thoughts on the structure and that type of stuff?
Yeah, most definitely. When you've got the basically confirmation on top of confirmation. That's what we're really looking for. I mean, we want price action and indicators giving us the right information. But I think that probably highlights what I said earlier about understanding what the indicators do, because when you do understand that that information that you're getting, you can actually apply it to what you're seeing in price action, what you're seeing with the pullbacks. Like, look at that. I mean, yeah, you got your double bottom there. You got right on the 20 moving average, middle of the Bollinger Band. You know, a very, very strong sign that it's going to go long from there. But you know, if you don't have that, I guess, price information and also the indicators really, you know, showing you what you're looking for, you are trading a little bit blindly and potentially, you know, jumping on board something that might not be getting confirmed by other sources. It's all about it, evidence. What we want to see is evidence all the time, as much evidence as possible that something is going to happen. And, you know, when you understand what's being put in front of you, it does make trading a hell of a lot easier.
All right, well, we'll go back into the slides, then we'll draw back onto these live charts and have a quick look and put some of the theory into practice as well with some other examples that are happening kind of, I guess, in the market right now. So, of course, types of strategies for day traders and scalpers. We have the standard kind of ones that we just talked about. One of the ones was we used moving averages. Now, we didn't quite use them with roll reversal because it was just a full breakout to the next zone. But we'll talk about roll reversal more in a few moments. The other thing is channel breakout strategies. If you're trading, let's say, pre-market to the London European session open, what's going to happen is often through the Asian, after New York close, to the Asian session, and then to, of course, the European session, the market sometimes doesn't move that much. So it will actually move within a range, kind of like it's a sleeping giant. Then it will sometimes have a breakout that will happen either half an hour before or around 1 hour after the session open. And a lot of people like trading this breakout, Ty. And we've done it in the past. It's obviously very time intensive trading this breakout, but what you want to do is you want to get the close of the New York session into the European or the London session, and you want to draw your resistance, so your top end area, and your support, and then you want to trap price for a break of that session. Ty, what are your thoughts about that type of thing for scalping?
Yeah. Oh yeah, most definitely. When you can actually channel a market, you know, whether you're trading inside the channel or trying to trade the break, understanding those support and resistance zones that are actually containing that price action is most important, because it does make scalping a hell of a lot easier. One thing for certain, you know where your take profits are going to be when you're trading inside the channel. But also, when you are trading a break of a channel, you also get the opportunity to get in again if you do miss the initial break. Sometimes you get the pullback to the top of the channel. And also, again, as you can see in this slide here, you're seeing that the movement is generally the previous move of the previous channel. So it really helps you place your stop losses and take profits in the right area, which is really key to actually getting the scalps right on some of these majors, and also some of the cross pairs, of course.
So we have a whole bunch of different structures that you can come in with. Of course, you've got the double tops, the double bottom patterns. We have these types of patterns that we talk about. These are all the bullish side things, but of course, you just get the reversal for these. We do have a cheat sheet for these as well. If you join the Discord, I'm sure you could just ask for it in there and you'll get a copy of it. But we've got basically double bottoms, double tops, very, very common, ascending triangles, descending triangles, inverse head and shoulders, and flags. And I actually find that specifically things like inverse head and shoulders, ascending triangles really work really great on the 15-minute chart. And that's, of course, a pretty good time frame for most people's scalps, especially ascending, descending triangles, Ty. I found them to be almost magical in the markets recently, and that's because like what we saw there in the pound yen, we saw a story that was so convincing towards the bull side. Higher lows. What effectively is an ascending triangle? A series of higher lows. It's telling you the secret. The secret is if we break out above here, because we've made those higher lows coming in, there's been some kind of bullish momentum. And when you know there's bullish momentum or there's this hype and anticipation and everyone's getting that FOMO to get through, Ty, that is going to be one of the stronger patterns. So I'm actually coming around to it. I don't know if we even talked about this that much, but yeah, I'm coming around. I was a big advocate of flags many years ago, but I'm starting to come around to the old ascending triangle. I'm thinking the ascending, descending triangle, even the reversals of them. It could be my favorite pattern. What's your favorite pattern? I actually don't know at the moment.
I'm I'm a little bit bias. I mean, my favorite pattern's the best one that worked out last. So it does deviate between flags, ascending triangles. But look, the double bottoms and head and shoulders and inverse head and shoulders in the direction of trends are generally my favorites, because they are the ones that have price action proving what the pattern's doing. But they've got to be in the direction of the trend, so they're not as frequent as I would like. But look, ascending and descending triangles are awesome, especially when they're in the right places. So yeah, they're all my favorites. It's like asking which is my favorite kid. It's generally the one that's probably done the dishes last.
They did the dishes. I didn't know. Do you have them? Do you have them on the was it the pocket money rate? I remember getting 20 cents for the dishes, Ty.
Not
glorious. Yet. Should have put that into forex trading when I was like 7. Role reversal here, support and resistance switching role examples. So basically, Ty, this is one of the staple go-tos for any swing trader, but it can also be applied to day trading and scalping. It's basically where we recognize key resistance zones. This could be the top of a range or a top of the channel. Remember, what will often happen, we talked about before, Ty mentioned it, we might get a breakout at the start of a session, but not all is lost by the breakout. You come in up here and you go, damn, I missed it. Hey, the better, more conservative trade is actually the pullback to where was resistance becomes support. And you can see here, this has actually got one of our favorite tells. I think I've used this slide with you, Ty, for a long time now, but this is a 4 hour, but I don't care if it's a 5 minute or 1 minute or 15 minute, the same thing applies. It's these wicks, these bullish momentum wicks, which are showing strength that wasn't there initially. There's buying here, some kind of strange accumulations going on that get me very excited. I don't feel bearish. Some people would say, oh, it's taking too long, and they get itchy fingers and they click the closure button. When I see trades like this and I see this specific type of candle formations happening here, I get excited because I know that that's the type of price action that I want to be seeing. There is some bull out there, some algorithm, some trader, some whoever it is that is buying the zone, and they're buying it aggressively off this level. So this is the type of thing that if it was on a 5 minute, 15 minute tie, do you get excited by that kind of thing?
Oh, most definitely. I mean, that's what we're waiting for as technical analysts, really, especially when we are scalping the markets. So yeah, they're definitely the things you need to be on the lookout for.
So I think we'll go over here to the US dollar index, and we'll go over to the euro as well, just to show what's happening in the market and the importance of a scalper and what they've got to do. And it's not easy. It's not easy. We're not going to say it's easy out there in trading, because here is a great example of today, and a closure did occur above this resistance. All right, so this is above the 90-30 kind of zone. You get a closure on a 1 hour or a 4 hour or whatever real time frame you're looking at, and then you think, what a great level to scalp off, because you've got a 1, 2, 3 kind of zone. And yes, it can be, but you can also take it down to one final piece of confirmation that you're looking for. And it's what we talk about quite a lot on the channel, and we talk about all the time. It's in our course as well, our technical analysis masterclass course that we spent a long time creating. Basically, the lightning bolt, Ty, the final step of one of the better types of scalping based trading. If you can find a level that you love on the 1 hour, on the 4 hour, and you find a role reversal that you love or a pullback that you love, and you can then go into a 5 minute chart or a 1 minute chart or 15 or whatever, and you find the lightning bolt, which is effectively a trough, a peak, a higher trough, and then a higher peak. What is this telling us, Ty? It's so important.
Oh, most definitely. Yeah, understanding price action is key. When you start combining that with the moving averages that we've been talking about and the pullbacks to them, it makes such a big difference. So you definitely need to understand this. I mean, speaking of technical analysis, I know we've got a couple of questions in here about the course. We're about to, I'll quickly post it in there actually. We've got a special sale on for Pepperstone clients, and it's only for the first 20. So it's not open to everybody for the whole weekend like we normally do. It is only a special for only 20 people, the first 20 people. I'm going to post it in the chat room because we have a very, very big special on the technical analysis course, which covers a lot of what we're talking about tonight, and of course a hell of a lot more. So yeah, if you're looking at doing it and you haven't done it yet, now is the time to do it, because it is significantly discounted for Pepperstone clients.
So this lightning bolt, what it really does is you're going to miss some pips. Okay, you're not going to get the absolute perfect price, but what it is going to do is it's going to show you that the market is willing to go back into the participation phase, willing to go back into the next move and continue up here. So we may not be trading the US dollar index, but of course you may want to trade the inverse of that, which is usually the euro US dollar. It's the exact same thing. We want to break it down. And what we wanted to see here was a sell followed by a pullback, making effectively a lower peak and then a new sell. And as soon as it gets past this level, a scalper would short it. And they may short it only down to here. They may short it for further movement. And the good thing about recognizing this pattern on the higher time frames is, what is this pattern? Generally speaking, if you go to a 1 hour, most people are going to tell you, or a 4 hour, this is a double top. So a lot of people are going to look at this and they're going to say this is a double top pattern, and they're looking for the short. So if you can then time that short with the opportunity of a lightning bolt in the direction of the trend, or direction of, in this case, the pattern, because the trend's obviously still up, which makes it a little bit risky. That is a more powerful technique in scalping. So things that we've covered today, we've obviously covered channels a little bit and breakouts through the ranges. We've covered the lightning bolt coming back off pullbacks in the higher time frames, because there's plenty of area there. There's plenty of juice that you can get a hold of. And of course, we've also covered one of the most important things, which is looking at the candles and understanding that the wicks, especially at key support resistance areas, should be taken as positives for your trade if they're in your direction. So let's say like here, you can see what the wicks are doing right now, Ty. Very strange price action. Obviously, the market has no idea what it wants to do. We have a rejection candle, 1 hour. Then we have bullish looking hammer 1 hour. And then we're sitting in the middle of the zone. In fact, if you grabbed all of the candles together, it'd be like a long leg doji at this area. It would literally be one. So it has no idea. But if it closes above this wick, or it closes below this wick, it's trying to make some kind of decision. That's the type of thing that it's trying to do. So it's really important to just think about the candles, think about the market psychology. And I think that's what separates sometimes a newer trader from more of a, I guess you would say, a professional trader or someone that's been around for a long time, that they truly understand the price action and what these candles are telling them. They go through the timeframes, top-down analysis, until they get into the time frame they want to trade in, but they know what's going on above. All right. So it brings me to one of the other things that we talk about a lot when it comes to scalping majors, Ty, the 1, 2, 3, 4, in this case, method. So basically, sometimes we see very clear resistance zones. Again, this is a 1 hour chart, but it could be a 5-minute chart, 15-minute chart, doesn't really matter. What's happening here? Well, we've got a base. So effectively, the market has come down over time. It's made a trough. It's made a lower trough. It's then made equal peaks all the way through here. And more importantly than anything else, it's made a series of higher lows coming into it. So once it broke through here, and I can tell you that when this did break through, it went very, very significantly into the 50 EMA 4 hour. It actually just went smash straight into that and continued on up after. This series of higher lows, this series of multiple resistances being touched, and then the breakout that occurs. If you see a breakout, a pullback, and a small lightning bolt on the smaller time frame, it presents an opportunity for traders out there. Do you really like this type of thing for finding formations? I think it took me a long time to understand that there's a structure usually at the end of every trend and the start of a new trend that looks something like this.
There is, and I think the most important component of that is, reading the price action and understanding that it's doing that in the smaller time frames and getting ready to potentially reverse. I think understanding that you are seeing a slowdown in the big sell-off and things starting to point up are really, really important things to identify early, so you can actually look for those breaks when they happen. You've already got a momentum shift on your side. Really, really important.
Richard brings up a great point here as well. And by the way, people, if you have any questions about trading or about questions you've always wanted to have answered, please ask them now and we'll answer them throughout the rest of this webinar. But Richard brings up a good point. Euro probably waiting for the CPI in 2 hours, question mark. Absolutely, Richard. The Euro will be waiting for that bit of news and then it will make its decision either way. But even if you didn't know that news was coming out on the higher timeframes, not the scalping timeframes, you will automatically see the market is confused. You can see that in the price action, right? You just can. It shows the confusion there. I mean, it has no idea what it wants to do next, but it will probably make a decision in the next couple of hours. 3 indicators a scalper can use, Ty. Of course, we've got the stochastic, the MACD, and the moving averages along with the Bollinger. So we'll call it 4 indicators. They're all good, but you need to know, as Tyrone said, when to use them. So MACD is good for range bound. Stochastic, generally range bound. However, if you do take it in the direction of trend as the pullback, so only on, let's say you're an uptrend, only on the oversold, it can add like a small percentage of value. I'd say between 5 and 10% of your overall trade decision, something like that, Ty. Would that make some sense?
Yes, that makes a lot of sense.
Not much.
And when you start doing that, yeah, it does.
Yeah. So but only in the direction of trend. So basically the oversold,
100%.
you don't want to take the overboughts. Like that's
No,
trying to counter something that's not going to work out well for you.
it can stay overbought for a very, very long time.
Absolutely. It can stay overbought so long. Let's have a look at this one. Look at the overbought here. This could be a weekly. It could be sitting there for ages, or sitting in the middle for ages as well. So remember, stochastic indicator is great, but you have to know when to use it. And it's more usually within channeling markets, range-bound markets. If you're trading trends, generally you're looking for moving averages, you're looking for other indicators. Even the Bollinger can be used sometimes in the trends. Stochastic indicator, simple strategy. Of course, these are the overbought and oversold. I think most people are probably starting to get aware of this. If you're not, maybe watch over this on YouTube. Have a quick look at this slide. It really presents, I guess, the overbought and oversold areas in a beautiful form. It's very, very nice looking, which is always cool. And sometimes you can change things up. We spoke at the start of this webinar about news, Ty. Non-farm payrolls was last week. That was a bit of an exciting one. We did it on YouTube Live, and it was an event. I haven't seen a non-farms actually move the market for some time, and that sent gold like a rocket ship, and Forex currencies were all moving heavily. I mean, US dollar moved heavily. It was wild. It's great to see a different number, because most non-farm payrolls for, I guess, the last 3-4 months, a few people have said to me, Tom, these non-farms, you say they're volatile, they're not moving. Well, it should be volatile. And then you saw what happens when the news is different from the expectation. Boom, straight out volatility. This week, more volatility. Risk management strategies, Ty, bit of a boring subject for some, but actually the most important one. We always go back to this circular thing, which is effectively, if you think about slicing up, this is your trade plan, still very important. This is your risk management, so it's a bigger slice, and then your biggest slice is actually your psychology. So you want to have the best psychology possible, be like a machine, like a robot in scalping. It's so important to be machine-like when we're making investment decisions or scalping decisions. And your risk management is your second most, if not arguably your strongest, because it can really affect your psychology heavily. So I think these kind of related a lot, but you could give almost anyone, like, I think was a Van Tharp, Ty, years ago. Didn't he just coin flip and basically have this extreme risk management and extreme strong psychology, and he actually was profitable at the end?
Correct, yeah, and had a group of the world's best traders doing the same thing, actually, and it did work out for them longer term, most definitely.
Phenomenal stuff. So just again, wanted to go over some extra kind of charts. So like the pound yen was moving, the pound US dollar, the major, was the actual one that was showing us it all. So here's the resistances. Look how crazy this resistance was. And then we have that breakout. Again, participation phase. We're going to put our resistance right up here at the highs, this 4 hour, and then that's going to be our aim. And you can see how close it's gotten to that, started consolidating underneath. We go over to US dollar yen. This is one that's actually trapped right now, Ty. The 4 hour seems trapped like right down here. And then we've got a decent little body close kind of resistance up here as well. Go over to the daily. You've been looking at this one, few days here, trapped within the 20 and the 50. I mean, you love these traps within the 20 and the 50, don't you? It's like literally just saying, hey, we're not ready to go through, but we're coiling, ready for the next move.
100%. We love it. I mean, the problem is though, you look at that, if you don't understand price action, you look at that and say, what a messy chart, and you think, well, you're getting a lot of wick action, you're getting a lot of crazy stuff going on, but when you understand what price is actually doing, it's actually giving you the sign of what it's actually, it's showing you the confusion, it's showing you the volatility in that area, and I think that gives us the clues that we want, especially the bigger spikes. So they're really, really important to understand.
what you can do here is, if you don't want to take the breakout, which I think the breakout could be dangerous because there is a lot of volatility each way with spikes, you could wait for the pullbacks, and then those become the opportunities to look for smaller time frame lightning bolts. Again, we know it's range bound in some way right now, trapped within those moving averages, trapped just generally. But when it breaks out, you may not want to take the breakout, but maybe the conservative kind of pullbacks, there's an opportunity there in smaller timeframes. Just that kind of thought process. Again, it's educational. It's the idea is to show you some of the ways that you can look at the market a little bit differently. We even go over to something like your favorite tie, the US dollar CAD. I'm going to load that one up. It's on what you would think is a pretty interesting level of support. We're basically right on the previous lows. We go over to the weekly, and when you really start scrolling out, you'll see how important this is. Like, this is a multi-year low that's forming here on the 17. It looks like it's falling off a cliff, but as a scalper, yes, you know the trend is down. But when you come and have a look at this on the smaller time frames, you start to think, well, is there any sequence of buying? Maybe not yet, but Ty, I mean, what happens if it gets through something like this little peak here? Is that starting to break up again for a little bit?
If it breaks, if it gets past it, I mean, if it gets past it, yes. But again, it's one of those things where it has to do it, and you don't want to be preempting that, because if you do,
never.
You can't be preempting that at all. Definitely not.
Yeah, you have to. It's about recognizing the key areas. Are we at a key level of support? Yes. Would you buy here? No. That would be a bit crazy. You'll usually get it wrong. But if you wait for things to confirm to the correct low levels or zones, which you can use price action based on, then sometimes you will see opportunities in all of these charts. Odd is another one that's coming back down here, tied to a previous level of multiple resistances acting as support. There's a whole multitude of different things that go into trades. Again, top-down approach, I think, is one of the biggest keys, and then recognizing when you're looking at price action. I mean, I think for me, the odd, this level of support that happened over the last week, these levels with these big bullish rejections showed me that the market wanted to go long for a period there. We also had weakness in the dollar index, which allowed a lot of scalps to the buy side. But you knew that because you're looking at the top-down approach. So we'll go back over to some questions now, Ty. Remember, just ask those questions away, everybody, if you want to have anything answered. We'll quickly go from the current slide as well. As Tyron mentioned before, we do have a 50% off sale for 20 people. It's Pepper50 if you're interested in getting involved in our masterclass and private trading community. I'll chuck it in there again. And if you also want to join either Pepperstone's Telegram, I'll put that in there as well if you're not part of Pepperstone's Telegram, or our public Discord. We'll put all the links in there now for you to get into those ones and at least get involved in the communities with several like-minded, I guess, traders, which is really cool. But we'll hand over to some questions and see what people have. So are you looking at the
here from, numbers? Sorry, I was going to answer the same one to Andrews about looking at the CPI numbers being released later as the reason the market is going sideways at the moment. Yeah, look, the market's going sideways at the moment because I think it's very uncertain of where it's going to go. There are a lot of reasons why. Yeah, look, apart from the fact that the key indices around the world have hit all-time highs, there's obviously still a lot going on. These numbers, the problem with the numbers at the moment, Andrew, is that you can't totally rely on them. A little bit like the non-farm payrolls numbers the other night. Sometimes the market's reacting a little bit differently than what you would normally expect. So in times like this, sometimes good numbers are actually seen as a bad thing for the market, and others, bad results are actually good for the market, which is really strange, and it sounds convoluted, but that's just the way it is. Because I'll give you an example. If the numbers start to be really, really good, okay, so say unemployment is dropping, it's production starts to increase, GDP starting to increase. The problem with that is they're going to start raising rates. Okay, so that's going to be bad for the market. And that's a bit of a problem for people, because the market relies on, at the moment especially, a very low interest rate environment. So holding costs are low. Companies can borrow money basically, for nothing to build their companies up. But if interest rates start going up, it's going to affect their bottom line. That's going to flow onto the stock market, which is actually going to see a downturn on what should be actually good news. Because I mean, for the economy, it's actually better to have a healthy economy, but it doesn't. The market doesn't read it that way sometimes. So you've got to be a little bit careful with what the news results are at the moment, because they're not actually reacting exactly how you would want them to all the time.
Yeah, I agree, Ty. It's all about like it's kind of like bad news is good news because of stimulus and not taking away all the support of the market. The market doesn't want the support taken away; it wants to be juiced for as long as possible. And that's part of the problem that caused stagnation back in what was it? 16, 15 in the markets and the S&P and etc. There's a question here, probably more for you, Tyrone. Daniel says, "What's your opinion on scalping indicators or EAs?" So I think scalping indicators can sometimes be okay. Some people use VWAP, which is an indicator we will cover eventually in these webinars. VWAP's pretty popular, which you can install on MT5. Then there's EAs. Problem with EAs is usually going to be, is it yours or is it somebody else's? If it worked so well, why would they sell it for like $50 or $80? I think that you can get into a lot of trouble there.
Yeah, EAs for scalping, you must, like, it's a real problem if you're using somebody else's, because you just don't know what it does, whether it actually reacts properly whether it adjusts when the market changes. If it's your own EA, different story, because you can adjust it and you know what it should be doing at any given time. But if it's one that you don't know of, like a closed box, if you don't know the rules and you don't know what it's supposed to be doing, you probably want to be sticking clear of those runs, because eventually, even though they may look good for a short period, they can blow up on you, and then sometimes by the time that happens, you've lost a fair bit of money. So you want to be avoiding other people's EAs in that definite situation.
We've got 3 more questions I'll answer here quickly, Ty. I'll go through them. Hi, you mentioned unexpected news on the non-farm payrolls last week. As a 1-minute scalper, are you able to analyze the lead up to the event? What are some indications to show it's better not to trade the news? I would generally suggest, if you're a 1-minute scalper, do not trade the news under any circumstances. There's too much chance of getting whipped by some kind of scalp, like kind of widening of spread or something that happens around news. All sorts of things can happen around news, especially non-farms. Under no circumstances should scalpers trade non-farms. That's just my opinion. Obviously, you can do whatever you want, but it's just so risky that the trades are often huge on one direction, then it completely reverses 2 seconds later. It's a big bit of complex news, and the market doesn't always know how to interpret it. Case in point, have a look at the NASDAQ index upon the release of the news and have a look how fast it went up, and then it went straight back down, and then it went back up again. So it's all over the place. So non-farms I wouldn't look at, and high impact news often can be just too dangerous in the 1 minute. Why put your hard earned at such a risk when you can go and find high quality breaks without that kind of news around? Then we've got a question here from Sudia. Says, what's the best time to trade as a part-time trader who comes home at 6 p.m. and has a full-time job? I'd really suggest you watch some of our previous webinars and consider swing trading. If you've got a part-time job, you know 6 p.m. you probably have a busy life as well. You want to put in like 45 minutes a day, swing trading all the way. You can also check out our course, but yeah, swing trading it's one of the best places to be. Please explain current leverage situation. I think this is probably a question about the changes in Australia. I would suggest you actually give Pepperstone, your sales representative, a quick call, and they'll explain it and send you a package of information about it. You need to use, I think, at the .A's, is that right, Ty, at the moment, if you're in Australia, because the leverage situation has changed. But I would suggest talk to your Pepperstone representative. Then we've got a question here. What's the best period range for EMA? The best range, or the best ones that we use, 20 close, EMA, 50 close, and 200 simple. We like those a lot. And then we've got one last question here. EAs are great if they stick an alert of some kind on the chart for you, and then an alert, and then you can do the job yourself. Agree. They can be used well as like an indicator.
Semi-automated, definitely. Yeah.
Semi-automated, cool. It's cool because it's basically like having an indication. It's like an indicator itself, but it's an EA indicator that sends you an alert and does all those things. So if you want to explore that more, I guess you could, but just remember, buying those ones, like as Tyrone said, that they carry a lot of risk, and we've been around a long time, and most of them are dead from the start that we started, Ty. I don't think I can think of one that's still alive from back then.
That's right. Yeah, exactly right. All right, brilliant. Thank you so much, everyone, for taking your time out tonight to join us for the scalping. We had a few requests for the basically doing pairs, but we're not doing that in this webinar. We are doing that in our live webinar, which starts in 10 minutes. So if you'd like to attend that one, yeah, definitely jump in on that. That's free, and we'll be analyzing all of the charts of the techniques that we've talked about tonight. Now, you should find there will be a survey after this webinar. Please fill it out and take the time to do that if you've got a moment. It'll help us make the webinars more customized and more useful for you in the future. So thanks again, and yeah, we look forward to seeing you either in 10 minutes or in a couple of weeks.
Awesome. Thanks so much, guys. We'll see you soon, or we'll see you in a couple of weeks to another great webinar where we'll go through some education, and hopefully you guys have been enjoying it. See you soon.